Hello, welcome to today's session. Today is 13th of January 2025, Monday, one day before the Sensex Tuesday expiry. Let's see what trades we took today and what has been the movement of Sensex index today. So marked all the important levels at which are entered and exited trades, different colored lines. I'll talk through that later. But first, let us see what positions we have taken through the day. So you see that we are in a net profit of almost 2000 rupees, and the total account value is 4.6 lakhs, and we have used a total margin of 4.1 lakhs as of now. So here you see the total account value and the total margin that has been used. Now looking at the different orders that we placed through the day, we started the day by trying to place short straddle because today N6 opened with a gap down. We'll see the charts later. So because of a gap down, there was a spike in the volatility. Premiums got shot up. So I wanted to capitalize on that. So I was trying to sell a call and a put around 76,600 levels where the Sensex opened. And only the call order got filled because the put did not open where I was expecting it to. Which meant instead of having a short straddle, we ended up with one call option sold right at the market opening 9:50, and what I did was I immediately placed an exit because I saw there's a lot of volatility with a nominal gain of 20 points, which is like around 5% capture of the premium, because staying longer in the trade might have been risky if the move went against us, and we were able to capture a small profit there of 21 points or 420 rupees in the morning. And then later on, a few minutes later, around 9:38, 9:39 a.m., I placed a short triangle, and this time I chose strikes that were very wide apart, 4 strikes, 79,200 CE on the upper side and 74,300 P on the lower side. And you could see both the strikes are 4,900 points away from each other. This is like more than 3 percentage points on the upper side and more than 3 percentage points on the lower side from the current spot price. And because the market had already opened up with a gap down of almost 1%, it was actually 0.75 to 0.8% in the negative. So chances of another very big move was less, because these days market is actually making a move between 0.5% and 1% or 1.5% on a close to close basis, on a daily close basis. And based on this, we had a good chance that the selected prices would still expire out of the money, and that we are retaining both 79,200 call and 74,300 put, and the 2 strikes which were sold in the short triangle. We are retaining those. And later on at around 10:27, 10:28 a.m., there was a momentary spike up in Sensex, and the index went from 76,600 to 77,000, almost 400 points it went up. And there, because of the increased sudden move, there's a spike in volatility again, and we wanted to capitalize on this, and we placed a short straddle order here, and the order got filled in very quickly. We sold both the call and a put at 77,000 levels for a combined premium of 720, and we can see that about 40 minutes later at around 11:06 in the morning, we were able to exit the short straddle with a nominal profit with a combined premium. So we bought back both the strikes for a combined premium of 660. So 720 is what we sold it, and 660 is what we bought it back for a net gain of 60 points, 1,200 overall profit. And that's because the index did not move significantly in either direction within those 30 minutes. So there were moves, but the index would kind of trace back to where it was hovering around 77,000 levels, plus or minus 100, 150 points, but it was not that far away from 77,000 levels, which was the level when we entered this short straddle position. Had we waited a little longer, say other half an hour or an hour longer, then probably we might have doubled the profit as well. But saying that the market is dynamic, volatile, and waiting longer could also mean a higher chance that a big move, sustained big move in either directions could happen. And if that does happen, then our short straddle will actually get into a negative zone. We'll incur a net loss. So we're good, we're okay for the time being. It's just about seeing that there isn't the current trend has been going on since you entered the trade is in your favor, and there hasn't been a very big move that has happened against you, and you put a stop loss as well, right? So in this case, my stop loss was equal to the profit percentage. 60 points or around 8% is what I had as a profit target, and the same was my stop loss as well in this case. And moving on, we did exit the short straddle within about 30 minutes. So ideally, you may want to wait for at least half an hour to see a significant decrease. It's better to wait slightly longer, about hour and a half, or maybe around 2 hours. But after that, you need to see that through the rest of the day, right? 2 hours is like 1/3 of the day is already gone. You're almost approaching the middle of the day where European markets open, and there could be change in the market direction and the trends as well. So it's a risk, and it's a straddle that you've taken here, a short straddle, and a move which is going against you very quickly will leave you very less options to make any adjustments. So it is kind of a balance between the amount of time you need to wait and the amount of profit you're willing to make. But the first rule is do not lose your capital. Do not let your past profits decrease. With that in mind, so we're okay to part with a small profit, with a nominal profit. It's not a small, it's 1,200 that we're getting, right? It's far more than what we get in short strangles. So it's still fine. It's not 2,000 or 3,000, which we may have pocketed if we did wait longer, but who's to say that it wouldn't go into the negative territory, correct? So until we keep track of the changes in Sensex on a daily basis for a longer period of time, with the new changes that have been introduced, Sensex becoming a Tuesday contract and increased margin requirements, so there's been less retail participation. So we need to keep a watch for a while and also ensure that there's no major news or event that is happening which would prevent a big move coming up in the index as well. So moving on towards the later part, around 2 p.m. we entered another short strangle. So between the morning and 2 o'clock, it was like almost like the last 1/3 of the day, right? We saw that the index, though it did open the negative, after it opened there, it was kind of range bound. It did not slip significantly further down. So with that in mind, we're much more confident of the region or the range within which the index would expire. So with that in mind, we entered another leg of short strangle, and this time we chose strikes of 74,600 on the put lower side and 78,400 call on the upper side, about 3,800 points away from each other's. It's almost like 5 percentage points away from each other's, right? So 2.5 percentage away from each of the strike prices, with about 1.2 days left till expiry. And there's a really good chance that both of these rates would expire out of the money and ensuring that we pocket the entire premium. So that is explanation of the different trades that we entered, that we placed, and we see the current position. And this is what it looks like. We are in a net profit for all of the positions, and the put, the intermediate strike of the put which we sold slightly there where we actually entered it, 74,600. I would suppose that is because Sensex has gone down further a little after we entered. So now let's look into the charts. So there you go. So what you see here, the blue crosshair intersection, vertical and horizontal lines, is where we entered the first short strangle around 9:35, 9:38 time period, and which we are still retaining. And the green horizontal line that we see here around 10:27 a.m. time frame, that is where we entered the short straddle, and the saffron intersection around 11 a.m. what you see here is where we exited the short straddle with a profit. And moving further in the day around 2 p.m. and at 76,450 levels, this is where we entered the second short strangle position, which are still holding on to. If I just zoom out, so this is how we see Sensex has behaved today. It's opened with a gap down. It tried to fill up the gap, it went up to maximum of 77,100, but since then it has come down 800 points, and currently it is around 76,300 levels, just above it, 76,350 levels. So these are the positions that we are carrying ahead to the last day of the expiry, Tuesday. We see there are a total of 3 lots sold on the put side, a total of 2 lots sold on the call side. So let's see how the day holds up tomorrow, and if we need to do any adjustments. But overall view, all of these strikes are 2.1, 2.2 percentage points away from the current spot price. So there's a very high chance probability that all of the strike prices will expire out of the money. That's all for today. Thanks for watching.